Let's dive right in. We're talking about the hidden fractures, the warning signs that are flashing red across the global financial system. It's time to cut through the noise and find the signal. So how does something like this start? Well, it begins quietly. Almost nobody noticed it. The first US bank failure of 2026. But wait, it doesn't stop there. On that very same day, gold and silver take one of the most violent one-day nosedives we've seen in decades. And as if that wasn't enough, the whole high-flying tech sector, especially those AI stocks, suddenly hits a wall of fear, triggering a huge market sell-off. So, you've got a bank failure, a metals crash, a tech tumble. Are these just three random, unlucky events happening at the same time? Or are they connected threads in a much bigger, much more worrying story? Okay, so let's unpack this. We have to start with that first, really clear signal that told us something was deeply wrong. And here it is, Metropolitan Capital Bank and Trust. I mean, look at it. It's a small local bank from Illinois. Its assets are basically a rounding error for the giants on Wall Street. So when regulators stepped in, the whole process was designed to look, well, boring. Nothing to see here, folks. So why are we even talking about this? A tiny bank fails. Who cares, right? Well, because in the markets, timing is everything. This wasn't just some isolated event. It was like a spark landing on a pile of very dry tinder.
And this quote right here, it just nails it. The bank itself, that's not the real story. It's a symptom. It's that classic canary in the coal mine screaming that the financial atmosphere is turning toxic.
Right, so that one little event started pointing to these huge stress fractures forming just under the surface, totally out of sight. And this is where things get really, really serious. Because behind closed doors, away from all the headlines, the New York Fed held a secret, unannounced emergency meeting. Why? Because you can bet they were seeing the exact same stress signals that we were. And if you want cold, hard proof of that stress, here it is. $50.35 billion. That's the staggering amount banks were forced to borrow from the Fed's emergency window in a single day. Let me put that into perspective for you. This was not business as usual, not even close. It was the highest demand for emergency cash in years. This is the financial system's plumbing making awful, groaning noises under extreme pressure. A dead giveaway that banks are running low on cash.
So why are they so short on cash? Because there's this ticking time bomb lurking on bank balance sheets. Over $337 billion in what they call unrealized losses, mostly from bonds that got absolutely crushed by rising interest rates.
And that brings it all full circle. The failure of that small Illinois bank wasn't just some one-off incident. No way. It was the first visible crack in a system that's been stretched way too thin, with absolutely no more room for error. You know, the really scary part is, we've seen this exact movie before. History isn't just rhyming here, it feels like it's playing on a loop. I mean, just look at this list. Interest rate risk, way too much leverage, unchecked growth, poor risk management. Does any of this sound familiar? It should. These are the fundamental ingredients of nearly every single major financial crisis we've ever been through. And this just lays it all out so perfectly. You had the 80s savings and loan crisis, then the 2008 global meltdown, then the regional bank mess of 2023. The names and dates change, but the underlying causes, eerily similar. Which leads us to that massive question mark for 2026. So all of this brings us to a critical fork in the road. And as I see it, there are three potential paths for where we go from here. Okay, path one. The pressure keeps building, financial conditions tighten, and the markets stay on edge. Path two. Maybe this was just a blip, a weird positioning purge. The forced selling is over and things just snap back. Or there's path three. The canary was right. More cracks appear, more stress shows up, and this whole thing snowballs into something much, much bigger. And isn't this the one lesson we just can't seem to learn? That stability is so often just an illusion. A system can look perfectly calm and stable right up until the exact moment it isn't. Which leaves us with the most fundamental question of all. It's the question 2008 asked, the one 2023 asked, and now it's being asked all over again. Only this time, it feels a whole lot louder. When the system itself is under stress, who do you really trust? If you want to keep getting to the signal behind all the noise, make sure you subscribe. And if you found this valuable, a simple like goes a long way and helps us continue to create these deep dives. Thanks for watching.